Good evening, everyone, and welcome to this session hosted by Advocata Institute. I'm sure the timing is just right because there was an announcement on some revisions on the taxes, vehicle imports, so on and so forth yesterday by the President and the Finance Minister. So with that, we thought this session would be timely, and I'm sure everyone is also on somewhat holiday mode. So this will bring some insights to what we should expect from the budget, and also in terms of bringing the economic policy right, what we need to do. Without taking any further ado, I would like to hand over to Murtaza Jafeerjee, the chairman of Advocata Institute, and he needs no introduction. And we are looking forward to engage with you. Murtaza will first present slides and share his thoughts on the budget and how we should think about the economic policy and the future. And afterwards, I'm looking forward to get your questions. So if you have any questions, please make sure that you type it on the Q&A, so we will be able to get the questions and shoot those questions to Murtaza. Thank you, Murtaza. Over to you.
Thank you, Dharanath. As the title of the webinar says, it's Musings. So Musings is like my thinking. And what I'm hoping to do in today's session is trying to explain to you how I'm thinking about issues. So I've used an economist lens to look at issues. And hopefully, as our mission is economic literacy and advocacy, hopefully that I can leave with you something about how to think about some of these fiscal policy issues. So let me first start. So I need to explain some basics to you. At times, you might think it's a bit technical, but sometimes the elegance of some basic mathematical relationships cannot be taken away. And let me try to explain as best as I can. So, most of you probably are familiar with the concept of GDP, and there are three methods in which the gross domestic product, the word domestic means what is produced within the confines of Sri Lanka. So there's an income method. And if you look at the income method, what it tries to say is that of the production that happens, the benefits of that, who does it go to? So there are basically three constituencies: wages, which is the returns to labor. The PR is the profits, basically, what goes to the factors. So, interest and dividends and retained earnings, and then taxes, which goes to the government. There's another way to look at it, which is called the expenditure method. And that is showing how the resources were expensed. So the Y stands for GDP, and either it could be consumed, either it is invested, and consumption is either by the government or by the non-government sector, which are firms and households. Investment also can be from government, and what it can be from private and firms. The X stands for what is exported, and the M stands what is imported. The third method is what is called the production method, which is the accumulation of the different sectors. You have three main sectors: agriculture, industry, and services. So this is a tree diagram that kind of tries to show you, under the production approach, what accounts for GDP. We have a large amount of services, 61%. Industries, of which construction is a large component, because there's a manufacturing sector, and then construction and utilities. And then there is agriculture, which is about 8%. And then taxes are 7%. So there's a concept called gross value addition. So gross value addition plus taxes gives you GDP. And this is based on real GDP. What I'm trying to show is the expenditure approach, and what components are contributing to GDP. So you can see that this is constant prices. So this is adjusted for inflation to see over a period of time. And what is visible here is in 2023, the output is significantly below 2018. And although we have posted a very strong third quarter GDP figure, we are still going to be below what we achieved in 2018. The recovery will probably take past 2015 to go back to where we came from. So consumption is a large component, and then investment and exports minus imports, it's a net negative figure. So we import more than we export. This is the income approach. So what labor share is actually a smaller component, and then what private firms have, and then you have this other sector, which, because we have a large informal sector, which they own, like small businesses, etc. So it's a combination of labor and capital that creates their surplus. So now to some economic relationships, and it's important that I go through this because there's a fundamental point I'm trying to explain to you. So what you see here is basically the expenditure method that I explained. So once again, consumption, which has both the government and outside government, which are households and firms. You have investment, which is both government and non-government. The majority of it is non-government. Exports minus imports. And the concept of savings, especially by the domestic sector, is your total income minus total consumption. So it's an easy concept to understand that you get X amount of income, what you consume, what's balance is what you save. Economists have this concept called absorption, which is the total consumption plus investment. And if your total consumption plus investment basically is more than your GDP, it means that you need to bring savings from outside the country. Now, lots of people talk about the trade balance, which exports stands for the exports of goods and services. If it is only goods, that would be, excuse me, merchandise exports. But X minus M is the trade balance, which is the export of goods and services minus imports of goods and services. And if you take this equation where I'm pointing to and rearrange it, X minus M can be written as income minus consumption minus investment. And that is the same as this relationship, savings domestic, Y minus C minus I. So there is the concept of national savings. That means what is the savings that belong to your nationals as opposed to what is generated within your economy, because some of that savings may not belong to your nationals. It may belong to foreigners. And that adjustment, you take the domestic savings and you add what is called primary income. In our case, this primary income is negative because we have a lot of foreign borrowings. The indebtedness of Sri Lanka is something like 60%. So there's something called the international investment position, and it's quite high in Sri Lanka, 60% of GDP, which is a combination of profits that accrue to foreign investors and debt that accrues to foreign investors. Now, that debt is not only with government, there is also private sector debt. The equity component, of course, is mainly private equity, private sector. Then you have secondary income. And secondary income is net transfers. So basically, that is remittances that are coming into Sri Lanka, which will be around 7 billion this year. And we also have remittances that are going out of Sri Lanka. It used to be about 1 billion because there was a lot of Chinese workers working here, a lot of expatriates. So a lot of outflows are also there. And the concept of this current account balance, which is what drives balance of payments issues, is this trade balance, which is X minus M plus primary income plus secondary income. And mathematically, it is written like this. So what a current account balance is a savings investment gap. And the savings is at the national level. So the current account balance is the savings investment gap. Now you can take this and break it down into what is the savings investment gap from the government and what is coming from the private sector. So very simply, the current account balance is the savings investment gap of the government and the savings investment gap of the private sector. So the savings investment gap of the government is what you normally call the budget deficit. The technical term is overall balance. So that is basically the government's taxes minus what the government consumes minus what the government invests. So that's the savings investment balance of the government. And I have written it again, the savings of government minus investments made by the government. So finally, the current account balance can be looked at the overall balance from the fiscal plus the private sector's savings investment. So what drives the savings investment gap of government? Well, one is a revenue. So it will be dependent on the tax policy. It will also depend, the tax policy defines what are the areas that are going to be taxed at what rate. The tax buoyancy is highly correlated to economic growth. So when an economy is doing well, say economy grows by 5%, generally if you have tax buoyancy, the taxes should grow faster than the economy. And what explains that? Well, when economies grow, people have more income and they will spend it on discretionary items on which the tax intensity is much higher. There's also the case that when an economy is doing well, your variable income component will be higher. Bonus, perhaps some overtime, and that will get taxed at your highest marginal rate. So therefore, the tax collection of government is going to increase. And generally, firms also will make more profit if the economy is doing well, and therefore they will pay more taxes. Revenue is also dependent on tax administration, that whatever the tax policy says, that it is enforced. And then you'll also have revenue from non-tax sources. That also, if the economy is doing well, you'll probably be earning more non-tax revenue. Then how you spend it. So you can break it down to something called primary expenditure. And that is mainly recurrent expenditure without interest plus capital expenditure. And what drives that is the size of government. In Sri Lanka, it's fairly large. 15% of the labor force is employed in the public sector. The social welfare programs that you have, like subsidy transfers, we used to call it Samurti, now it's called Aswasuma. Capital expenditure, how much is being invested by the government, and what goods and services the government itself consumes. And then finally, the interest expenditure. In the case of Sri Lanka, it's very high, like one of the highest in the world. Like last year, it was 8% of GDP. Maybe it will come down slightly this year because there might be a little bit more nominal growth. That's dependent on the size of the government's debt, what's called the gross financing needs. So how much of the debt has to be rolled over in any given year. And if you are running a primary balance deficit, then you have to finance that in addition to the maturity of the debt and paying the interest. Now, the issue that Sri Lanka has is that we have to reprofile our debt. We have to issue longer dated securities. And since our yield curve is massively upwardly sloping, there's about a term premium of about 250 basis points. Most countries, it's less than 100 basis points. But because we don't have a lot of buyers at the longer end of the market, it is costing the government a lot because we have to issue longer dated securities, which have to be issued at a significant term premium. The monetary policy will determine the prevailing interest rates. And the exchange rate also will play a role because some of that debt that you have is borrowed from overseas. So what drives the savings investment gap of the non-government sector? Well, you'll have the household sector's debt. And that would be basically their disposable income, wages, non-wage income, which will come from investment income. And the disposable income is after deduction of direct taxes. Then you'd have what you spend it on. So you'll have non-durables, goods that have a lifetime more than 3 years, discretionary items like holidays, and shocks. You can also get shocks, uncertainties. You can fall ill. You can be faced with a natural disaster. You can get injured. Then the difference is what you save. And there will be what is called a precautionary motive that irrespective of what interest rates are, you will save for an uncertainty. And one other thing that drives savings is real returns. Because in the case of discretionary, or you might decide that I will forego current gratification for future gratification because I am being rewarded for saving by a real return. So I will be able to consume more at a later stage. And it also depends how much you save, also depends on one's stage of one's life cycle. If you are in retirement, you'll probably be drawing down your savings. You'll be probably having a negative savings rate. But somewhere in the middle part of your life cycle, you probably need to save more because there's greater visibility of retirement. In the case of firms, what drives this savings investment gap is, first of all, obviously profits. And profits would depend on productivity of the firm, the growth that the firm is enjoying on its products. Maybe it's an under-penetrated market, so it has higher growth than what the economy is growing, and general economic growth. Profits are also dependent on factor markets, the price of inputs, and also competition. How much of this margin that you can retain, or it will be competed if you are earning an excess margin, will that be competed away? What the firm also retains is depending on the dividend that it pays out. So that would depend on expectations of shareholders and whether the retained earnings are needed for future expansion. The amount that will also be spent on investments would depend on future opportunities, the expansionary capital expenditure. There will be some amount of capital expenditure for the upkeep of the existing operation, and whether the firm is investing in non-core assets, other financial assets. So this is what Sri Lanka's savings investment balance looks like. So the government has a deep, very large savings investment negative balance, what we call the overall balance or the fiscal deficit. And the non-government sector has a big surplus. And you can see in the table below, this is all as a percentage of GDP, what the private level is. And when I say private, it is firms and households, and what the government level is. So the pink is the primary balance, S minus I, which is your primary balance. And then you have the interest. Note in 2023 how large the interest was as a proportion of GDP, one of the highest. And the difference between the two is your national savings minus investment gap, which is the same as your current account. So when you run a current account deficit, you need to find resources from outside your nationals. And this is a classic twin deficit phenomenon that is taught in basic economics. Sri Lanka is a classic twin deficit country, that it runs a large current account deficit, and it runs the main contributor of these current account deficits is the large fiscal deficit that the government runs. Now, why did I explain all of this? Because there is a total misunderstanding what creates this balance of payment crises. There is this confused thing about precious foreign exchange, and we should conserve for essential items. I mean, this is not a misunderstanding by uneducated people. Even mass majority of corporate Sri Lanka, even highly educated people, I hear them saying this, that we have debt service payments to, we should keep money for essential items, non-essential items. And what I will show you is that this is the wrong way to think about the problem. That in Sri Lanka, these large current account deficits is due to fiscal profligacy. That you obviously allowed the private sector to have too much of income because you didn't tax it sufficiently. And you had a government who excessively spent. And because of past sins, the government has accumulated a large amount of debt on which most of the revenue is going to pay interest. And therefore, what's left behind is very little for other spending. And invariably, what happens is you are borrowing and borrowing continuously to keep this debt going. So the cause of repeated balance of payment problems are due to excess spending, what economists call the absorption problem, too much consumption and too much investment. So what contributed to this? Loose fiscal policy, and that is where I call today's event Unsolicited Advice on Fiscal Policy. Very high overall balances, large primary balances, and high interest costs. Loose monetary policy, historically, because of something called fiscal dominance. That monetary policy was highly determined by the needs of the government, the fiscal sector. And misallocation of resources, because the government was meddling with relative prices and poorly targeted subsidies. Most of the rest of my presentation is to give you more analysis and insights into these three problems. Excess investments were not only by government. The bulk of it was from households and firms. So these images that I'm showing are often cited in discussions by the press, that there were many white elephants that were built. But these white elephants were not only built during the Rajapaksa regime. This is an example. I had served some time as a voluntary member of the SOE restructuring committee. And we had gone for a site visit to the eastern province to look at a particular company out there, Galloya plantation. And we took a site trip to the Oluville Harbour. I don't think most of you even have heard about this Oluville Harbour. It was built maybe 15, 20 years ago. And interestingly, in 2014, the Oluville Harbour looked like this on the left. And what you see now is the entire entrance is silted. So I had an opportunity of driving through it. And it's completely like a ghost town. It has really great infrastructure. But the entire harbour has been abandoned. So again, many of these investments didn't yield a productive return. But it was not only the government basically that overinvested. There was enormous amount of overinvestment happening from the non-government sector. And this is a photograph taken some years back when many of these buildings were being constructed. As I said, even people who are supposed to know were seeing these as signs of development. I mean, they believe that Sri Lanka is going places. All these cranes and buildings were a realization of development. But to me, from 2015, the first thing I was thinking is there's a lot of imports inside these buildings. And don't forget that many of these, I'm not pointing to any specific one, had huge BOI concessions. So exemptions from duties, and many of these real estate development were targeted for high income households. So again, what was happening is you had overinvestment through fiscal and monetary policy. You had loose monetary policy, real returns were low. So people decided to invest in real assets because they feared that there'll be a loss of value of monetary assets. The second is fiscal policy also contributed to it because you had a lot of incentives. Many of these things were not vettable. You had duty concessions. So you could import Italian marble. You could import German kitchens. You could import sanitary ware. Although there is protection for poorer people, there was no protection for these luxury condominiums. So both the combination of loose monetary policy and loose fiscal policy led to overinvestment, especially in some sectors. So this is a chart over a long period of time. This is over like 12, 14 years of what happened to credit growth. So you can see towards the end, credit is contracting when the crisis broke out. But you can see in the middle part that credit growth just took off. And the question was that where was this credit going? Was this credit going to create productive capacity in the economy? Or was it going for too much of excess investment and too much of consumption? Perhaps not in investments in items that would really create future economic output. And I did another analysis. What the top chart is showing you is in the first half of the last decade, there was a significant contribution to economic growth coming from construction. And what you are seeing in the line chart is basically the growth of the construction sector. The column is whatever the GDP growth in that particular year, how much of that was contributed from the construction sector. So you can see in some years, and in 2017, etc., you see that big contribution which is coming because they started counting the port city. And then towards the latter part of the decade, the sector's contribution started coming down. And there was also degrowth in the sector. But the bottom slide, bottom graph is showing you the significant growth in credit from the banking system to the construction industry. And what you see, the second line, as a share of total credit, also it grew. It used to be about, at the low point, about 12 to 13%. And at the high point, it went up to about 20%. There was a time I remember seeing it that almost 40% of the growth in credit was coming from the construction sector. Now, don't misunderstand me that I'm not saying that construction sector is bad for the economy. But the question is that were there policy failures, both on monetary policy and fiscal policy, that led to an excessive investment or excessive spending in certain types? A lot of the credit also went into the land market. I always suspected that the credit growth that was going on, the banks were reporting where this credit was being booked. But at the margin, I always suspected, especially with proprietors, etc., whether the credit was getting booked in their business, but the money was being used for land speculation, real estate investment. And this is a graph of land values in Colombo district. This is an index prepared by the central bank. And the gray line is nominal GDP, and I've indexed it all at 100. And you can see that at one point, that land prices outpace the growth of nominal GDP. So either the land was being used, especially in urban areas, for some high return projects, or there was a lot of speculative activity that was going on. And it is now clear, anecdotally, when you hear that a lot of this money basically that was getting booked under different businesses, so it didn't look like it was going in for real estate or land speculation, actually ended up in the land market. And that is the only explanation why it did so well. So the first misconception is that cars create balance of payment crisis. Lots of people are of the opinion that the cars are the fault. And all this trepidation about relaxation of duties and import curbs on cars, that is not the reason. It is one of many others. It is a smaller contribution. It is just visible. And you see these expensive cars out there on the road, and there is this perception that this is a luxury item. And then there is this perception about these SUVs, that because there's all, the way we tax them is all wrong. So they cost a ridiculous amount of money. Like I will show you that we have some of the highest, most ridiculous levels of taxation on certain types of vehicles. It's not on a scientific basis. But we import 4 times more fuel than vehicles, even at a high point. And look at building materials. There's a lot of building materials also. The amount that we pay on building materials, steel, cement, a lot of imported items. And some of it does not get captured under building materials because to benefit certain businessmen, certain individuals. And Advocata has done an extensive 2-year report on affordable construction, that you don't see it under construction material because they are highly protected. But by trying to make these items in Sri Lanka, actually you are importing more. Your import burden is going up because you have the wrong type of energy, wrong type of raw materials. And then when you protect, people make supernormal profits. It's not that they keep the money in the bank. They go buy highly luxurious items. They build palaces. They make supernormal profits. A lot of input items in those are all imported. So cars is not the reason for this repeated balance of payment crisis. It is a contributor, but a much smaller contributor than so many other things. So again, one of the narratives that I hear is that the solution to Sri Lanka's repeated balance of payment problems is we need to export more. It's a problem that we need to export more. Then we will solve this problem. So let us look at the case of Turkey. It's an export champion, and it has done extremely well over the last few years. Now, is this a price effect or whether it's a volume effect? Turkey is not a large commodity exporter, so it's not a price effect. But Turkey has a very entrepreneurial culture. They have amazing business people. The Anatolian tigers, they're referred to the Anatolian tigers. They also have a fairly diversified export basket. And this area chart shows this different. So the greens are in apparel. It's a big apparel, although their income levels are like at over $10,000 per capita. They still have a very sophisticated apparel industry. They have a huge tourism industry. 28 million tourists come to Turkey. Transportation business. Turkish Airlines is a very large global player, one of the biggest airline companies outside the United States in the world. They also export vehicles, cars. In Sri Lanka, you can buy these brands called Beko in Singapore. It's a Turkish company. So they have a wide export basket. And in something called the product space, they have presence in many different types of products. So what you see as bubbles here, this is the cumulative. If you add all the bubbles, it's the world trade. And each bubble is the relative size of a particular product group. And you can see chemicals, minerals, metalworking, construction. So they are fairly well represented in the product space. They do a lot of stuff. But loose monetary policy, their president, basically, Erdogan, to buy political favor, because he wanted to get re-elected, he told the state banks to go out and lend. They went and had massive credit expansion. You can see the M2 growth, sometimes like 30%. If you have successive credit expansion about 20%, you invariably get into trouble because you're going to make a lot of bad loans. And you had a lot of monetary expansion, which led to very high inflation, negative interest rates. And Turkey was a strong exporter. It ran a trade balance. But you can see, because of the huge expansion in loose monetary policy and excessive expansion in credit, that towards the latter years, the imports far exceeded the exports. And if you look at the right-hand chart, it led to a huge trade balance. And since they have also borrowed overseas over the years for investment, etc., they have a sizable primary income deficit. They're paying interest on foreign borrowings. Combination of those two led to very high current account balance. So this is as a percentage of GDP. And you can see that, even the fiscal affairs were fairly well managed at about 1% deficit. And they were running a primary balance surplus. But because of loose monetary policy, it led to a large current account deficit. And invariably, the currency collapsed. Turkish lira collapsed because their president also tried to hold the currency at a particular rate. He didn't allow it to be market determined. So the point I'm trying to show you here is that more exports will not necessarily solve a BOP issue. It is the appropriate fiscal and monetary policy that will avoid future BOP crises. Now, why do we need exports? As I said, exports is not the solution to current account deficits. The solution to current account deficits is the appropriate fiscal and monetary policy. But I bring back that expenditure equation. Exports contribute to greater economic output because you are selling to the world. And by being competitive, ability to sell to the outside world, you also make your domestic economy competitive. Because if you are going to be a successful exporter, you will have to fully liberalize your imports. Because most firms add about 30% value addition. 70% is inputs that you need from others. And for you to be competitive, you will have to also ensure that your inputs can be sourced from the best and cheapest and most competitive in the world. When you liberalize your import economy, you also have to make sure that your domestic producers are competitive. So you get a huge benefit from improving productivity. Now that is complete opposite of what Sri Lanka did. And look at our contribution to GDP from exports. So focus on the graph at the bottom. And this is showing you how much exports has contributed, the growth in exports has contributed to total economic output. And I have taken a data series over 20 years. And the contribution of exports to GDP is very low. In some cases, even negative. But look at the absolute tiger economy of Vietnam. And you can see that their contribution to exports, to GDP from exports, looks completely different to what it looks like Sri Lanka. And I've also shown you Thailand. And Thailand is a much more developed country. I mean, its per capita GDP is maybe double or more than double Sri Lanka's. They also have a vibrant export sector, but since late, the contribution of exports to the Thai economy is less. This is what the trade structure of Sri Lanka looks like, what we export. And you can see that we import a lot more than we export, generating a huge trade balance. But as I will explain, how we fund this trade balance. Look at Thailand. It's a very, very large export champion. And look at the phenomenal performance of Vietnam, that Sri Lanka's exports over these 20 years grew by 3x, Vietnam grew by 15x. Next misconception. I've heard a lot of analysts talking about remittances are needed to bridge the trade deficit. That our people are working in the Middle East, they're sweating it out as housemaids, etc. And that is what keeps the fires burning. I am arguing that is the wrong way to look at it. Actually, remittances widen the trade deficit. Right? It's a misconception that it bridges the trade deficit. It widens the trade deficit. How come? So in the the balance of payment is basically an accounting presentation. You're presenting the numbers, how your external account looks like. And this is how normally it is written. Export of goods, import of goods. The difference is the merchandising trade. And then you have the service account, service exports. In our case, it's tourism, the large one. We also have transport sector, port related. Service imports. Then we have primary income and secondary income, in which remittances is what is booked. So historically, what you say is that since secondary income, remittances are at the bottom, you say that the things on the top, basically, it gets paid for because of secondary income. But if you rearrange it, the way I have done it on the right-hand side, and look at inflows and outflows, to generate outflows, you need inflows. So many commentators say that remittances bridge the trade deficit. This year, Sri Lanka will get around 7 billion of inflows on remittances. Around 1 billion will also have net outflows of remittances. It used to be about 1 billion. I don't know what the figure is this year. There is a household income and expenditure survey done in 2019. And that says about 7% of Sri Lankan households get remittances. I am assuming, and another household income expenditure survey is long due, normally done every 5 years. So I think they're going to do one next year. COVID and various other things disrupted the process. But I would say that ratio, which was 7%, is now probably 10% or more. And these remittance receiving households have significantly more spending power than non-remittance generating households. And therefore, these households have greater spending power, and it is they who do the spending. And that in turn creates more aggregate demand that then draws in more imports. So to me, this is the way to think about it. I'm moving on to the role of prices in a market economy, because this is something that we have got wrong number of times, because we don't understand what objective what is the best tool to achieve certain objectives. We are using the wrong mechanisms. So economists think of two problems: allocation problem and the distribution problem. The allocation problem deals with how resources are assigned to produce goods and services, because resources are scarce, right? So the question is that, who gets what? The focus of the allocation problem is efficiency, and it's about maximizing productivity. The distribution problem is who benefits, and it's about this fairness in income and wealth. Now, what's on the right-hand side is where the political debate is all about. So, whether there is an equitable distribution of income and wealth. So, either it can be done through income or it could be done through affordability. So, the role of prices in a market economy. The first thing is prices have an important signaling role. They convey information about supply and demand. It is about the allocation of resources. Goods and services flow to those who are willing and able to pay. It incentivizes producers and consumers. High prices incentivize more production and discourages consumption, and vice versa. There's a huge coordination role in economic activity. It synchronizes decisions across millions of individuals and businesses. This is what famously Adam Smith gave the example of your breakfast table. How it all comes together. It is not the benevolence of the butcher, the baker, the milkman. It is they are acting in their own self-interest to make that breakfast happen for you. The redistribution of income, the pricing mechanism also plays in terms of wages and profits. And prices also promote competition, because if the incentives are there, you'll have changed behavior, more people. And don't forget P, the famous Kotler's 4 Ps, price is one of the Ps. But prices, the role of prices don't always work if there is market failure. Sometimes the market mechanism doesn't work. In case there are things called externalities, which I will explain, if it is a public good and if there are monopolies. And prices also have the equity issue, does not ensure fair access to essential goods, because some people can afford and some people cannot. So relative prices in a market system really matter. And the message here is that it is very dangerous to meddle with relative prices, which has been the story of Sri Lanka's downfall. We have been meddling with relative prices because you are trying to achieve distributional outcomes, but you mess up the allocative efficiency in the economy. So there is something called the consumer choice theory, which explains how consumers decide to allocate their limited income amongst goods and services to maximize the benefit they have. So the budget constraint is basically that your income is limited. And the combination of goods that you can consume is highly determined by relative prices, right? Prices of one set of goods versus other set of goods. But we also have preferences. All of our preferences are different. Some of us who have more of a certain type of good are willing to forego more of that good to have perhaps more of goods we don't have. And that rate at which we are willing to substitute one rate of good for another rate of good is something called an indifference curve, that the way you substitute between different groups of goods, you're indifferent to one bundle of good to another bundle of good. And this budget constraint line, which is based on the rate at which the market allows you to exchange goods, and the preference line, which determines what you'd like to exchange one set of goods for another set of goods. The tangent of the two is in a market system at which you will basically finally consume. Now, I go back to this issue of relative prices. So, the price of a good is its scarcity value. The distribution problem is the affordability issue. The affordability is a problem of income, not a problem of prices in a competitive market system. So if you want to address the distribution problem, it is best that you do it through income transfers rather than trying to meddle with prices. Now, today's focus is on the budget. We'll have to have an entirely different seminar or webinar on this foolish move of the government trying to put price controls on rice. I mean, there is a supply shortage. The best solution is just import. Trying to impose price controls and trying to crack down on what they call errant retailers is nonsense, basically. It's not going to solve the problem. So there are three types of goods. There are merit goods that are considered beneficial to an individual, but they underconsume it because they either underappreciate it or there is a spillover to society. There is demerit goods, goods that are harmful, not only to yourself, but to others. Like, for example, smoking. So when you smoke, you have passive smoke that is inhaled by others around you, and it is also harmful to you. But you underappreciate the harm because you can't feel the pain immediately. It will come much later. And then you have neutral goods that are neither merit or demerit. So what government policy tries to do is to use fiscal policy, what are called corrective taxes or tax subsidies to either promote the consumption of merit goods, such as education, or discourage demerit goods through corrective taxes so that you impact affordability, or you can use regulation. But this has to be done in a scientific way. So there is an old axiom: if you tax something, you will have less of it. If you subsidize something, including tax subsidies, you will have more of it. Now, I mentioned that these repeated balance of payment crises of Sri Lanka were created by monetary and fiscal policy. But since 2023, we have a new central bank law. So what changed? First is the question of autonomy and accountability. So the law ensures that they will have administration and financial autonomy, but it is yet accountable. Okay. So there was a misunderstanding even from my current leader when I had engaged with him about 1.5 years ago before this law came into thing. And independence does not mean lack of accountability. Independence means independence to carry out their mandate and use policy tools. Now, the objective of the central bank has been changed. So the primary objective is to maintain price stability. The other objective, it doesn't say secondary, it says other, is to ensure financial system stability. And third says, without prejudice to the attainment of 1 and 2, they can support the policy framework of the government. So, no longer is a primary objective about growth. It is a stability mandate. And it has slightly different board structure. There's a governing board. No longer is the Treasury Secretary sitting on the board. So it is composed of 6 appointed members and the governor. And then there's a monetary policy board, which has the governing board, all the members, plus 2 experts in finance and economics, plus 2 of the deputy governors. One who focuses on monetary policy and one who focuses on financial stability. Clause 86 explicitly prohibits monetary financing. They cannot finance through the primary market, the government. But because of an intervention in the Supreme Court, it was extended that under exceptional circumstances, like a natural disaster or a pandemic, they could finance the government. But again, it can only be done through treasury bills, and it will only be for a period of 6 months, and it cannot be rolled over. So we now have an institution with a clear mandate, which is price stability, and the autonomy to execute on it. So in my opinion, monetary policy is not going to lead to these large balance of payment crises that we had previously. Unless they don't carry out their mandate, this institutional problem has been fixed. Now the focus is on fiscal policy. So I don't know what the ideology of this government is, but if you use the social market system, which was what Germany used, and I'm using this as an example because I feel it is the middle path. It was spoken about by the former President Ranil Wickremesinghe. But in my opinion, this is a system that is highly suitable for this country because it has an element of no one gets left behind, but it allows the market system to allocate resources. So the private sector drives the market, the government basically taxes and redistributes so that nobody gets left behind, and the primary role of government is to set policy and regulate the market, not to be a player in the market. We need government. I know there is this discussion that, why do we need government? But even in a social market system, you need government. Because private sector cannot provide what are called public goods. The technical term is non-rival, non-excludable. Because, for example, take training and education. If you train somebody or you educate somebody, there is nothing that you can hold that person to your firm. I mean, so if you spend the money, basically, that person will get better skill and leave. But if the government does it, as long as that person remains in Sri Lanka and pays taxes, not only will that person's contribution grow the economy, but also the fact that that person will be better rewarded, they will pay higher taxes. Similarly to things like defense, because everybody benefits from it. But provision of public goods don't have to necessarily be produced by government. It has to be paid for government. So you could have a situation where you have educational establishments that are private, but the fees come in the form of an endowment to the student. And the student then decides in a competitive marketplace which educational institution they are going to use. So there is something called the RAND curve that there is an optimal size of government. Right? Above a certain size, it will create a negative effect. That if you have zero government, and if you expand it, or you have some government, it is still better than zero government. But above a certain optimal point, you have diminishing returns. Now, as I said that the monetary policy problem has been fixed, let's look at the fiscal policy issue, starting with the Ministry of Finance. So this is a curve, could update 2023, of governments and fiscal performance since the 1950s. What the pink lines are showing in the column, stack column chart, is the primary balances that we ran. You can see that, until like the 1990s, we were running very large primary balances. Where do you think all this debt came from? So there was a lot of social spending because we were still a very poor country, and there was a big explosion in the population. So there was a big burden on social spending, basic healthcare, primary healthcare, basic education. And then the debt started piling on. And what you see, the gray, is the interest, right? So the combination of the primary deficit and interest contributed to the overall deficit. These colors that you see are party colors. It's easy to visualize. And I have labeled who the finance minister was. Now, your problem is that you have the Ministry of Finance, which is a crucial institution. It should be led by the finance minister. Now, finance minister is a very unpopular minister because they are always trying to tax people and hold back spending. In our country, basically, it is the president or the prime minister or the leader who happens to be the finance minister. Now, the leader basically has his primary priorities politics because he has to lead his government. So he or she has a lot of things on their plate. The second is that they have to be popular. They can't do unpopular things like taxing people and holding back expenditure. And the Ministry of Finance is the largest ministry amongst all the ministries. So you need a full-time finance minister. But one of our problems, including now, is the president is the finance minister. And it is not only this president. You can see that over the last 20, 30 years, it is the leader who is the finance minister. So you don't have a dedicated, it's like, the CEO of the company is also the CFO. So this problem has to be addressed, that you need a full-time finance minister. Then how to do budgeting right? So from a former advocata conversation, let me get Arturo Herrera Gutierrez, was a former finance minister of Mexico. It's a $1 trillion economy, who's a World Bank consultant now. He came to Sri Lanka and he came on an advocata program. So listen to these 2 minutes.
So who comes with that is typically the chief economists, which do a debt sustainability analysis and determine the size of the deficit that a country could have in any given year. Then the second step is also the chief economists determining what are the macro projections. So they determine how much is this country gonna grow, what's the interest rate, and brings into the framework other relevant variables. For example, what will be the price of oil, the appreciation or not of the national currency between relevant currencies. And very important, this is the first institutional arrangement. They provide this macro framework to the tax policy unit. In order to forecast the revenues, it's important to know how much a country is going to grow, because depending how much it's going to grow, it depends how much revenue taxes are going to be collected in value-added taxes or corporate income taxes. But interesting this here is that between the step 2 and the step 3, that the tax policy experts are going to forecast not with the numbers they want, but with the numbers that somebody else give it to them. And finally, if you take the debt sustainability deficit implied there, plus the revenues, that means all the sources of income that a country is going to have in a given year. So they give that to the budget office to allocate the resources. But the budget office cannot allocate what they want to spend, but they could allocate what the country has. And there are many other countries in which these things are in the opposite way. They start to thinking how much they think to spend, then they estimate how much they are going to collect, and the difference is the deficit or the net debt. And if that is not in line with the sustainability path, that country may get themselves into a path of increasing debt. Now, the check and balances, the institutional arrangements to fix this are not only necessary to prepare the budget, but also this is what happened inside the Ministry of Finance, but it also should be the way in which the budget is approved at the Parliament, and also the way in which the budget is executed.
So this is how Mexico does it. I'll reiterate. So the first thing is that they have an office of the chief economist who basically computes the debt sustainability path to tell you how much you can borrow. Now, how much you can borrow basically is an afterthought in us. It comes right at the end. The office of the chief economist then gives a projection of what they think the country is going to grow at. And I explain the concept of tax buoyancy. So the tax policy unit, then he says it's an independent entity, estimates how much of revenue can be collected given the tax policy starts and what the economy is going to grow. So the combination of how much revenue you can collect and how much you can borrow then tells you how much you can spend. Right? So as he said, it's not about how much you'd like to spend, it's about how much you can spend.
So who comes?
Unfortunately, in Sri Lanka, we do it in reverse. So even we do the appropriations, we say, okay, we're going to spend X amount. Then we figure out how to raise revenue. And then we borrow the balance. So what happens here is that all sorts of arbitrary proposals are done for revenue. I remember once a finance minister, or was he a deputy finance minister, saying, we'll tax you if you're doing well. Highly distortionary taxation. It's like tax terrorism. You remember in 2015, super tax, they called it super. Instead of, they just arbitrarily said, anybody who made a profit about 2 billion, you will pay. You know, without an indication of profitability, which should be if you earn very high return on equity, then you pay super taxes. The absolute number is not a criteria to pay super taxes because it is not in relation to amount of capital that you are using in the business. So there is something called the Laffer curve, which says that how do you basically, there's an optimum point, right, of how much revenue you can collect. But what you should be doing is you should be not at that point, the revenue maximizing point, you should be in the growth maximizing point. Because as I will explain, taxes introduce something called deadweight losses. That any form of taxation will take away economic efficiency. But taxation is necessary to meet social goals and to run a government, which then improves productivity. So there are some notable quotes. Oliver Wendell He was the chairman of the US's IRS, Internal Revenue Service, and he says taxes are what we pay for a civilized society. In some respects, a civilized society is for a rationale for government in the first place. And Professor Mick Moore, who has done work on Sri Lanka, has said that societies in which its citizens pay taxes enjoy better governance, because people then ask questions. How is my tax dollar? They hold politicians more accountable. So Jean-Baptiste, who was Louis the 16th, 14th, the Sun King, in the Versailles Palace, that was the emperor who built the Versailles Palace. His finance minister said, the art of taxation consists of plucking the goose as to obtain the largest amount of feathers with the smallest possible amount of hissing. So as I said, taxes impose deadweight losses, and indirect taxes impact either the producer or the consumer's welfare. Direct taxes reduce disposable income. So this is this famous relationship, graphical relationship in economics, showing you the impact of the deadweight loss. So what is happening is this wedge, the triangle that you see, is because when you impose taxes, basically the prices go up. So the amount of consumption comes down. So the combination of higher prices and lower quantities reduce the amount of output that will be produced without taxes. And that introduces a deadweight. There's a loss of output in an economy. Part of that loss is a burden that will go to the producer, part of it will go to the consumer. And who shares what depends on the elasticities of the products, whether they have close substitutes or not. If they don't have close substitutes, they'd be more inelastic, and the burden of the taxation will be borne by the consumer. But if they do have substitutes, then probably the producer will have to bear most of that tax increase. So Sri Lanka has a real revenue problem, and you can see that over a period of time that the GDP grew, but taxes didn't keep up, although more recently they are catching up. We have been running primary balances for a very long time. Until 2023, there were only 5 instances in which we posted primary balances. It was 2 in the 1950s, once in 1991, and 2 very small primary balances in 2017 and 18. Again, primary balances are government revenue minus expenditure without interest. And the way to think about it is that is how you should judge a finance minister, because there's nothing that the finance minister can do about debt that has been accumulated over a long period of time. They have to service the interest. But they can do something about the primary balance, which is the revenue minus expenditure, which is under that finance minister's control. So we can compare with peer countries, and most of them have revenues to GDP of 20%, all taxes. It could be at different levels of government. Sri Lanka was ridiculously low at 8.4% in 2022, the year of the crisis. Bangladesh also has fairly low revenue through taxes, but they have huge non-government NGOs operating like BRAC, who provide a lot of social services. Sri Lanka is on a steady path of improvement. I think our trajectory is to go to 15%. But for those who say that the government is taxing the people to death, even countries in our region, much poorer than us, have much higher tax to GDP than us. So this whole critique against taxation is unfounded. So how can you get taxes? You can either tax what one buys, what one earns, or what one owns. So how is the income distributed in the country? Top 10% of households get about 35% of the income. The bottom 10% get only 1.6%. And the top 20% get like 51%. So basically, the burden of taxation must be on that top 20%. The bottom 50% will probably need more subsidies than taxes that they pay. So in this adjustment of Sri Lanka, it is important that the higher income people in society pay their taxes, due taxes. Now, some taxes are also through expenditure, consumption-based taxes. And this chart shows you the distribution of expenditure according to deciles. So what I showed you previously was the distribution of income. But if you look at the distribution of expenses, the top 20% of households account for something like 46% of expenditure. So they account for 51% of income and about 46% of expenditure. So this is this regressive problem that the bottom, now if you look at the bottom, they only account for 1.6% of income, but they account for 2.3% of expenditure. Now this is an IMF analysis of over a period of time, how countries' composition of what taxes contribute to total taxes. The VAT does the heavy lifting. Now we had just made it to upper middle income and we are back to lower middle income. So in most countries, the VAT brings them about 6% of GDP. At our low point, it had gone down to even below 2%. Now, the good thing about, say, if you impose a VAT of 18% across your whole economy, and since our current account is a deficit basically because we import more than we export, if you apply 18% on something slightly more than 100%, you will end up with 18% or 19% of GDP. So when they talk about 6%, that means a lot of things are exempted. Otherwise, you will collect, because you don't collect on your exports, but you collect on your imports. So in the case of Sri Lanka, I think we are moving towards about 4% of GDP, and there is room to go much higher. That should be the mainstay of one of your large contributors to your tax collection. Personal income taxes in lower middle income and upper middle income countries very low, only like 2% of GDP. It's a much smaller because income levels, because you're exempting, and we'll talk about this recent increase in tax-free threshold from 100,000 to 150,000. Then you have trade taxes. And you can see that in the more developed countries, trade taxes, there are border taxes. It's not VAT, it's a duty, and others are much smaller component because most of them are open trade. And also the corporate sectors across most income deciles are contributing close to about 3% of total taxes. So our taxes are now improving, and this shows you on an absolute way and on a percentage of GDP how we are doing, that the tax collection is continuing to go up. The contribution of direct taxes, income-based taxes are also going up. For years, it was like an 80-20 mix, but you can see that the target was 60-40, 60 to be indirect taxes and 40, and it seems like we are well on our way to that. So if you look at it, the source, absolute level, you can see that the biggest contributor to the increase in tax revenue in 2023, 2024, results have not come. It's a big jump in income-based taxes. And this is the composition of import taxes. Again, the VAT plays, but you have a look at this PAL and the Cess. So PAL it's like a para tariff, but it's analogous to duty. But the Cess is on a very limited number of items. And in the domestic economy, it is VAT, followed by liquor, followed by cigarette. And personal and corporate income taxes, and then corporate, non-corporate. So what this personal and corporate income tax means is that it's not just working class people, but proprietorships. So they file under the proprietor's business return, and that is why you see a much bigger jump there. So let's look at very quickly some indirect taxes. Liquor and cigarettes play a big role, right? And that has been growing. But there's a problem. I have plotted cigarette prices, JPGL, over a period of 9 years. And JPGL, a stick used to be 35 rupees. Today it's 150 rupees, right? So that's an increase of 400%. Now, inflation didn't increase at this rate. And you can look at the more recent past that it's gone exponential, the increase in cigarette prices. Now, the reason I am explaining this is there are some other analysts who say that there are some corruption allegations or that these tobacco companies are influencing fiscal policy, and it should be indexed to inflation. But as you can see here, the cigarette prices have far, far exceeded the rate of inflation. It is just crazy, the rate at which they increase cigarette prices because of ridiculously high taxation. And as I said, the regressive nature, you've got to make sure that, the taxes are paid by the people who can afford to pay the taxes. Now, this is the distribution of what proportion of expenditure, this is again from the Household Income and Expenditure Survey, is spent on tobacco products. And what you can see is that the poorer households, because it's a habit forming, it's an addictive product, right? They are spending a lot more of their income on tobacco. And tobacco is not only cigarettes, it's also BD, it's also, the tobacco leaves. So it's a highly regressive tax when you start highly taxing cigarette prices, that it is not the rich people who are bearing the burden of this. It is going to the people who can't afford to pay this. And what do you think is the taxation on a cigarette? The indirect taxes are 68%. And if you add the fact that they are highly taxed anyway, 40% on income, Ceylon Tobacco declares a large amount of its dividend on which withholding tax of 15% is paid. You add all of that, about 75% of the revenue coming from cigarette companies going to the government. Now, the point I'm trying to make is that in yesterday's announcement, they're going to increase the tax rate from 40 to 45%. And I explained about elasticities of product. You have one company. They have a lot of pricing power. So it is very foolish to take a company that's already paying 40% and increase the rate to 45%. And that company very clearly has the ability to price that to the consumer. And it is not that the tobacco industry is not paying their fair share of taxes. They're paying enormous amount of taxes. So government has been getting more revenue from the tobacco industry. But what is happening is that over this period of time where I showed you this precipitous increase in cigarette prices, stick volumes are dropping. I don't have the final 2024 statistics, but stick volumes are down to about 2 billion sticks. So in 2017, they were doing 3 billion sticks. And today, we are doing 2 billion sticks. So 1 billion sticks has gone out of the market. Now, the question is it that people have reduced consumption, maybe part of it, but some of it has gone into the grey market. And when you have such distortionary tax policies, the corruption vulnerabilities increase. It is estimated that there used to be about 500 million illicit sticks in the market. It has now gone up to about 1 billion sticks. So when you design tax policy, I mean, it has to be in the realms of what should be done. So in the case of tobacco, and if some of you are wondering whether I'm doing the bidding of a tobacco company, I'm not. But it's the most egregious example of bad tax design. I mean, you lost 1 billion sticks. Some of it may be that people are consuming less. The average daily smoker used to smoke. There's only about 1.5 million smokers in Sri Lanka. They used to smoke about 7 million sticks. It's now dropped to 6 million sticks, and the stick sizes also come down because they're smoking shorter cigarettes, which have smaller filters, which is far more unhealthy. And what is happening is that you are creating a huge grey market, and huge corruption vulnerabilities are going. And the second thing is that the people who are at the bottom end of the income ladder, the blue-collar worker, probably have to resort to things like tobacco because of their social behavior. But this is not something that is paid by the richer households. So not only is it distortionary, it's terribly regressive. And this argument that the cigarettes are not being indexed to inflation is absolute nonsense. Let's take the case of alcohol. I just used the case of strong beer because I had more readily available statistics. The case for arak is even worse. So in the case of strong beer, 64% basically is indirect taxes. And if you put in the direct taxes, because they are also taxed at 40%, of course, they have a lower level of dividend payout. It will come to about close to 75%. It's a total taxes collected from the revenues of the industry. Again, the issue is that, there's a female abstinence rate in Sri Lanka is about 95%, and the male abstinence rate is about 70%. So you put this together, only about 40% of the people who consume this product, and they are being highly taxed. And the high-income households probably don't go buy arak and strong beer. They probably bring it all in duty-free. So the point I'm trying to say is that if you look at even alcohol volumes, it's dropping because the prices have gone up so much. And what's happening is a huge illicit industry is getting created, creating a lot of distortion and a lot of leakages. So the problem with both alcohol and tobacco, which has been the mainstay of every budget, is that this is not a cow that can be milked anymore. You have milked it dry. And I think some kind of rationality will have to be brought in here, because there's a tremendously inequitable treatment here, because you are putting the burden, the combination of tobacco and liquor brings about 12 to 14% of government's revenues. So the burden is on a very narrow segment of society and poorer segment of society. This is not something that you are taking out from very rich households. So this has to be thought through. Next comes fuel and vehicles. Now, mobility is a derived demand. It is a product that is needed. It's a means to an end. And there's a popular perception that, we have too many vehicles on the road. But congestion is a problem that is highly location specific, and it is also very time specific. Now, you don't have congestion in Hambantota. Even in the peak hour, I don't have a photograph of the peak hour, but Hambantota has large roads. So, you are trying to solve a problem of congestion in Colombo city, But the problem of congestion is not all over the country. Don't forget that we built a lot of roads all over the countryside. Now, vehicles do lead to accidents and congestion, which are negative externalities. And there are smaller negative externalities from ICE vehicles, especially diesel vehicles, internal combustion engines. So the demerit nature of the good is through its use, not through ownership. So there is a case to apply some corrective taxes. So how do you solve this problem of congestion, which is a demand and supply problem at a particular location at a particular time? Either you can build a lot of more roads, widen them or new roads, or you have demand side solutions. You use pricing, or you give them faster travel time through alternatives. Now, the Millennium Challenge Corporation was to award Sri Lanka $480 million grant money. It was finalized in 2019. But the then President Gotabaya appointed a committee of 3 who advised him not to take it. Another great tragedy of Sri Lanka. Out of the $480 million, $350 million were for transport projects. $160 million was for an advanced traffic management system. That would have, increased the flow of traffic. And the $50 million was for what was called a bus rapid transit system. So what the aim was to partition out 2 lanes of 6 thoroughfares on the city of Colombo. So you are giving priority access on the road for better buses, more luxurious, faster, to operate like trains on main roads. So not only are you basically making public transport more available, but it's going to be a faster system. And that is a way to incentivize people with higher income to leave their car behind, not duties, not excessive taxes, but the convenience and faster travel time is a huge motivator for many people to use public transport. And if you give a much better system, so if we accepted this in 2019, by this time we would have had this. But one of the great tragedies is, for reasons best known to this committee and the president, it was turned down. Now, as I said, that it is not cars that created the balance of payment crisis. It was excessive amount of aggregate demand and supply. Excess amount of aggregate demand. And the import of fuel is 4 times more than the import of vehicles. Now, World Bank did an analysis to see if you have tax subsidies, which we were doing for fuel, who benefited from it. And what you can see in the right-hand chart is that 70% of the benefit of tax subsidies on fuel went to the top 30% of households. So this is how we tax fuel now. On petrol, about 38% of the retail price is taxes. In the case of diesel, it's about 33%. For years, we were under-taxing diesel and petrol. We made it too cheap. And now we have got the correct stance that in the case of petrol, it's about 39%, and in the case of diesel, it's about 33%. I did a comparison between our regional neighbors because, once again, you hear the political discourse where people are saying that, fuel prices are too high. On the election platforms, they were saying they're going to reduce it. But let's look at our neighbors. Now, Sri Lanka basically does not have the cheapest fuel. India, which is a much poorer country on a per capita basis, has more expensive. And Nepal, which is the poorest country amongst these 5 countries in South Asia, has the most expensive fuel. And note about their approach to kerosene. Now, at the refinery level, kerosene is more expensive than petrol or diesel. Now, if you adjust it for purchasing power parity, right, affordability, once again, you can see that Nepal basically, being a much poorer country, has a much more expensive fuel. And look at Sri Lanka's case, that on purchasing power parity, kerosene, because we hardly put any taxes on kerosene. And it is completely distorted because it is considered to be a fuel of the poor, but then it is used, it's mixed with buses and it's distorted. So because we are now taxing fuel, maybe not sufficiently, but at least we have taken all the tax subsidies away, you are not having misallocation of the resource, that you are now making sure that it's a scarce resource and using it judiciously. Taxes on fuel also are making a larger contributor to total government revenue. In 2024, for the first 9 months, close to 10% of total revenue is coming from fuel taxes. The way we tax vehicles is absolutely absurd. So we have this unit method. Depending on the size of the engine, we have a tax. And an engine capacity is an engineering decision. In the case of electric cars, the methodology is the power of the motor. In the case of internal combustion engines, the methodology is the displacement of the engine cylinder. Now, in the case of European vehicles, they use different technologies because of the way their policy is designed, with a small engine to get more power. But obviously, those engines are more expensive. They have to use more technology, turbocharging, etc. So you are using an engineering constraint to decide on tax policy. So what happens is that you could have two vehicles, same size. In fact, the vehicle with the smaller engine, more expensive, higher value, which has a smaller engine. And because of this quirk, the way you are putting a quantity tax based on an engineering specification, you are advantaging that vehicle over another vehicle which is probably cheaper at the importation price, but because of an engineering decision that has been taken to have a larger displacement in the engine, that vehicle has to pay a higher rate of tax. And I did a comparison between 3 Toyota vehicles because I had the data. That's the reason I took these 3 Toyota vehicles. So it took a Fortuner. And because we have this quantity tax based on engine size, the on-road price basically of this vehicle on Sri Lanka, 58 million rupees. And I looked at Thailand, India, and Pakistan. I mean, look at India, even Pakistan, which has a lot of economic problems like us. But our prices are just crazy. I mean, there's no rationality in this form of taxation. And I took a Toyota Corolla. And again, because we have this 1.6 liter between 1.5 and 1.6, the rate of taxation just goes berserk. Because if you go back here, it's not a progressive system that if you jump from like 1.9 liter to 2 liter, the rate of taxation jumps significantly. I mean, it's just an engineering decision. And even something like a Hilux, which is a utility vehicle, Sri Lanka is, in the case of Thailand, because it's made in Thailand, we are like 400% more, 4x times more expensive. In the case of India, we are almost double. And in the case of Pakistan also, we are 300% more expensive. So our vehicle, the way we tax vehicles, there is no logic in this. And I don't think there is any justification to do it anymore like this, because you are now collecting more and more taxes from direct taxes, because that's where you should. Once people have paid their taxes, there is no logical case to pay more and more taxes, basically through indirect taxes. Now, another issue is about these electric vehicles. I took 3 vehicles basically that could be compared, because you are taxing electric vehicles based on the size, power of their motor. You are taxing internal combustion engines and hybrid vehicles, basically based on the size of the displacement of the engines. So the first one is a Corolla. The second one, the middle one, is a hybrid vehicle. The street price of that is 27 million each. And in the case of the Corolla, which is a mid-market car, almost 59% of the street value is taxes. In the case of Prius, almost 63% is taxes. And in the case of an electric vehicle, which is a much more expensive vehicle, we couldn't find an equivalent thing. We had to use what was available in the market because the prices should be verified. It's about 37%. So, this kind of distortion, here the problem is not that electric vehicles are undertaxed. The problem is that ICE vehicles, because of this unit method, and this unit method is basically there because you have a problem with customs. And because you have an institutional problem that, that they cannot value these vehicles properly, you have introduced this method, which is creating huge distortions, huge winners and losers. And I'm not aware of many countries who do it this way. And again, it creates huge vulnerabilities, corruption vulnerabilities, because when the taxes are so high that people will try to jinx the system. So, you introduce duty-free permits, you produce secretary's permit, MP's permit, you misdeclare vehicles because the incentives are so high, because these taxes are like crazily thing. So in my opinion, basically, it's not a problem of electric vehicles being undertaxed. It's a problem of ICE vehicles and hybrid vehicles using the wrong base, and we should just simply go back to using value, because value captures all the elements. Let the engineering decisions be figured out by the engineers, and fiscal policy should just use value, which is the best way to do it. And I think that even in a country like Sri Lanka, basically, because of our tax issues, etc., that you should not be taxing more than 50% of the street price should not be taxes. That should be the upper limit. I mean, this is not a demerit good. A car is not a demerit good, and it should be a neutral good. And it's not this whole argument that essential good and non-essential good is all invalid. And therefore, we should have a more scientific way of doing this, which is basically only using value. And take the example of a larger vehicle, a SUV. I mean, you think about the equitable. Is the thing on the left, right, or on the right, right? So in the case of the right, it's a small car, but there's one person going in it. In the case of the left, it's a larger SUV or people mover, but there are a lot more participants going in it. So on a per person basis, what is more equitable? I would think that, the person on the left is doing a lot less to congestion, a lot less for pollution than the person on the right. There is also macroprudential regulation, etc., that is trying to limit the amount of credit flowing into vehicles. I just want to touch on a few points before I end. The concept of Cess. I think a lot of you may not know what this Cess is. I was also searching what this Cess meant. It stands for Commodity Export Subsidy Scheme. And the ability to impose Cess is actually in a piece of legislation called the Export Development Board Act. It's called the Export Development Act of 1979. And what it says, the power of that law is to vest the said board with powers necessary for the development of Sri Lankan exports and to provide matters connected therewith or incidental thereto. Now, from the Ministry of Finance annual report, I listed out the total amount of cess collected. What you see in the pink is the cess that is collected from exports. That was the original intention, to impose cess to convert non-value added exports, our famous tea, rubber and coconut, so that you put in a penalty on exporting non-value added products and force them to export value added products. How on earth did it go from the export side to the import, where 95% of the cess basically collected is coming from imports and only less than 5% is coming from exports? And if there is any measure that is going to be taken in this budget, and a policy decision was already made last year that the cess will be eliminated over 3 years, because we don't impose cess on all goods. We impose cess on certain goods. And if you follow the money and try to figure out who benefits from this, it's very, very clear. And Advocata did a 2-year study on building materials, and many of those building materials, which is at the detriment of poor households, go on certain items of building materials. And you just have to follow the money and see who owns these firms, and you understand the motivation of imposing these things. So, since I've been talking for a long time, I would like to end here and take any questions that people have.
Thank you, Murtaza. Thank you very much. We have a few questions, and I invite you to shoot your questions on the Q&A box. Also, I would like to, before we move into questions, if you are happy with the work that we are doing, please support us. Go to Advocata website, and there's a support tab, and please subscribe us. And there are multiple categories of donations and subscriptions. So please subscribe us, so then we will be able to provide independent analysis on these matters, which will ultimately take Sri Lanka to the next step. Thank you, Murtaza. We'll take a few questions. There's one question. This is the question. Would a windfall tax on the primary dealers and the banking sector be warranted, given the supernormal profits they have and are to realize on investments in treasury bonds? These entities are anyways implicitly insured by the central bank. That's one question. You want to take that up, or you want me to take a few more questions and answer?
No, so I think I'll need to take that up. So the question basically was about imposing a super tax. For those people who are not familiar what this issue is, during the crisis, because basically interest rates went to 30%, although policy rates were only about 15%, there was an expectation of a debt restructuring. So interest rates in the market went up to 30%. And during that period, which started from 1st January 2022, 1.925 trillion of bonds were issued. Okay. So what you see in the box, those bubbles there, is relative to the total size of the debt on 30th June 2023, when the debt restructuring was done for the domestic debt. Each bubble is the relative size of that issuance relative to the 9 trillion that was outstanding as of 30th June 2023. Now, what you see in the box there is these bonds that were issued after 1st January 2022, which I have termed crisis bonds. Okay. These bonds were issued at an average of 27%. What I call legacy bonds are all the bonds that were issued prior to 2022. And I've drawn a line there that the average on that was about 10%. The interest rate. So if you add the crisis bonds and the pre-crisis bonds, legacy bonds, the interest rate on the total bonds were about close to 14%. Now, the thing is that the people who bought these crisis bonds, I think the expectation was that this was going to be restructured. But what they finally did is they didn't go and restructure these crisis bonds, which were very high yielding, that most people expected to be restructured. They went on the basis of who owned securities. So they only focused on superannuation funds, because basically they went on the basis that they are what you call a pay-as-you-go system, that nobody's going to liquidate their holding, that as long as you have more money coming in than going out, it doesn't matter about the stock. It's a flow problem and it can be easily managed. So the aims of debt restructuring, where they had to reduce the gross financing needs, that means the amount of maturities that will come up in any 1 year, they simply focused on the superannuation funds, saying that they held 43% of the total bonds. They left the banks out, which held 45%, saying that there will be a banking crisis. Now, the problem here is that the 43% of what the superannuation bond funds held of bonds, they did not hold 43% of these crisis bonds. They only held around 22% of these crisis bonds. 78% of these crisis bonds were not held by the superannuation funds. They were held by other people. Now, when this question was asked, what about individuals? The individuals, they said, oh, they only hold 1.2% of all bonds. But they held, in my estimate, 5 to 6% of these crisis bonds. Now, when you have a bond that is yielding 27%, and if some of these things have a maturity of 5 to 10 years, and suddenly after the restructuring, the interest rates come down to 15%, 12%, 13%, you are making capital gains of almost 100%. So, for example, there's a 2032 bond that was issued at a discounted price. Normally, bonds have a maturity price of 100. It was issued at 62. Post restructuring, it was trading at like 150 rupees, 120 rupees. So, if you make a capital gain and you are individual, you're only being taxed at 10%. And I'm told that there is one individual who made a profit of 6 billion rupees. So, I mean, this is one case where blunder was far more expensive than plunder. Because what they should have done is they should have taken all the bonds and restructured everything. Because as I explained earlier, that you have a term structure of interest rates in Sri Lanka, very difficult to issue long-term interest rates. We could have solved the interest rate problem by restructuring everything. This argument that the banks would have been under stress is flawed, because they are also in the flow game. So the moment you did this, all the interest rates on the liability side would have come down, and they could have yet, even if they, instead of getting super high yielding bonds, if they got 10%, the average cost of funding is about 6% at the moment, or lower. They would have had their spread of 4% and done it. So now the question is that should you be putting some kind of supernormal tax on them, supernormal returns? The problem is that the tax year has gone. And now looking back and trying to claw back some of that, because anyway, they have to pay almost 50% tax. Because they have to pay 30% and they have to pay a financial VAT of 18%, etc. But even after paying taxes of 50%, they were left with very high returns. The problem was far more aggravated at individual level, because basically they would have sold the bonds, the capital gains tax is only 10% for an individual. So my answer, Dhananath, to that person's question is, now it's too late. But when they did this, I just can't understand why they did it. And this, the public talks about plunder. I talk about blunder, which was 10 times more expensive or even 100 times more expensive than plunder.
Thank you, Murtaza. The next question is it possible to give an indication of the cumulative fiscal impact from the recent tax revisions proposed by the government?
Okay, if I try to get my slides, it will take a long time. What I did was household expenditure and income survey from 2019. I took the wage rate inflation and inflated all the income levels up and tried to gather basically under the old system of about 100%, 100,000. It's about the top 30% of households, if they are paying their taxes, who would be liable to pay at 100,000. Okay, so we have had very low inflation this year. Now, the NPP made an election promise and they raised it to 150,000. So one of the pushbacks that the IMF made is that, you want more people in your country to pay some taxes. Okay, so if you increase this threshold, a lot less people will be liable, because it's fine. I mean, the rich people pay 51% of, they get 51% of income, so they have to pay the majority of the taxes. But everybody in Sri Lanka has a vote, right? And you want to have more people in Sri Lanka, especially paying direct taxes, because they can feel it then. Then they will hold their politicians accountable. So when you increased it to 150%, there may be some justification, because from the time that you decided that threshold to today, there has been inflation, although this year the inflation has been quite low. So I don't have the exact details, but when I ask somebody in policy making where most of the personal income taxes come, that person said that the lower band and the higher band. The middle bands don't bring them proportionately that the equivalent amount. So when you lift the 100 to 150, you are going to take a hit. More importantly, you are going to reduce the number of people liable to taxation. And you really, it's a more psychological issue that, you want to have more taxpayers in the country, right? You want more people to be feeling that they're paying taxes for the development and the running of this country. So there will be an impact. Now, they have increased the tax from 40 to 45%, which they already announced on alcohol and tobacco companies, which I think is an outrage, because these people are already paying 40%. In the case of Ceylon Tobacco, they declare, so of the balance 60%, 90% that they declare as dividend, and that 15% on that. So their tax burden is about 50% basically. Similarly for the liquor companies. And unfortunately, I didn't have the time that enough, but I had a lot of stuff about tax incentives, including the port city. And we have gone and awarded 18 companies under secondary criteria, like 20 years and 25-year tax holidays. In one case, the promised investment is $10,000, $100,000. And I'm not making these things up. You just Google Port City tax incentives on their website, everything is given, including all the gazettes announcing it. And absolutely not. I mean, our problem is whatever they are hoping to raise, without going and increasing the taxation on tobacco and alcohol companies from 40 to 45% and gaming companies who are anyway paying. What about all the people who have been legally exempted? All these high-profile projects, the West Terminal, the CICT, I don't know the status of the East Terminal, all these real estate buildings that you see on Golf Face, they have very long tax holidays, 15 years, 20 years. And the argument that is made is that you can't revoke these agreements. They better defaulted on the debt. What more, if you go and default on your debt, that's far worse than revoking tax agreements. And then, so what about the existing taxpayers? That if they were paying 24% and they are paying 30%, how can you allow basically somebody to pay zero? And some of these companies are 26-year dividend free. No taxation for 25 years. 15 expatriates or 20 expatriates, no taxes. Look at the distortion. So in the case of the port city, one side of Chaitya Road, you have one set of laws, one side of Chaitya Road, you have another set of laws. And not that they found a cure for cancer. They're just normal companies that are arbitraging this tax opportunity. And it is a tragedy that 18 companies have been given. Of course, I have been told that they're not going to give anybody else any more holidays, but we have to figure out a way how to make sure that those 18 companies, they cannot continue to enjoy. Just imagine 20 years, I won't be around also.
Okay, thank you, Murtaza. The next question, what are the key issues preventing the collection of higher tax revenue in Sri Lanka, and what solutions can be implemented to increase tax income? I think you touched upon it, but do you have any other suggestions on?
No, so the first thing is tax policy, right? So you are legally exempting people, right? That we can stop. I mean, either you put an alternate tax or you just revoke these tax things. There is no reason, because those benefits are going to very few families. As far as tax administration is concerned, one issue is, like I was explaining in the case of liquor and tobacco and vehicles, when you have such a distorted system, the tax policy is leading to leakages. The corruption vulnerabilities are so high because the incentive structure to cheat is so high. You can't, all the honesty and, clean government is not going to work. You have to have a more rational level of taxation, then the adherence will be more. As far as people, the tax administration, the tax effort, that has to come basically through digitization and more motivated tax administration. And even in society, I think we have to have an awakening, Dhananath, in society, that if you know people who are avoiding taxes, you should be reporting them.
Murtaza, there's another question about the debt. Sri Lanka has almost borrowed 8 billion US dollars in domestic debt in the first 9 months of 2024. Does this mean Sri Lanka will continue to rely on domestic debt in the next year as well for funding?
So with regard to that question on supernormal tax on certain entities, because you see, most of our debt restructuring was very light. We let everybody off. We didn't get much relief, okay, which was a big blunder. We should have cut deep, because I was an early proponent that we were going to default. Lot of the debt restructuring distressed debt guys were speaking to me from overseas, right? What they said is, make sure that you do a deep enough cut that you don't have to have a problem again later. We didn't do that. We let everybody off. Even this, basically, the foreign debt, we gave them a domestic component. No? So it was like a get out of jail card, basically. It was a very light way. So you can see that, okay, now their share values appreciated, etc., because the expectation is. But the thing is, the government has to pay. So this R minus G issue, which again I had on my deck and I don't have the time to explain everything in detail, your numerator and a denominator. The only way to get out of this debt problem is to grow your economy faster than at the rate your debt is increasing. The 5.5% growth that we posted in Q3 was a combination of the fact that some of the sectors that contracted significantly are rebounding, right? Like construction, mining and minerals that feed construction, apparel industry, because they were down previously. Now, we've also lucky with the weather. We had a lot of rains. Commodity prices have been low. So it was exceptional circumstances that kept this economy growing. Now, we are not going to be lucky every year. No? So now your problem is, when you are carrying so much of debt, your real interest rates, because of this question they are asking, and the fact that you can't money print your way out, right? And you have a central bank that has to make sure that it adheres to its inflation target of 5%. At the moment, it is too low, but that is exceptional circumstances. So since you can't inflate the problem away, and the fact that you have to reprofile your debt to longer and longer duration, it is not only about the 8 billion that you're borrowing, it's about also issuing it in much longer duration debt, right? Short duration debt is at 9%, long duration debt is at 10.5%, 11.5%, basically. Right? So your problem now is going to be that your interest rates, your real interest rates, because of the big government debt, is going to remain high. And high real interest rates discourage consumption, discourage investment for greater growth. So you won't be surprised that the strong Sri Lankan rupee is, you might have some slippage because there is a seasonality issue, etc. But the Sri Lankan rupee at 400 rupees and all, I don't see that happening because your aggregate demand will now be under control. So now you are going to find it very difficult to grow out of this problem. This is this R minus G problem. The rate at which real interest rates are, and the G is your real growth rate. R minus G has to be continuously a negative figure. And you have to get from the primary balance a positive contribution. That is how you can get your debt to GDP down. So with regard to this question about the $8 billion, that is a snowballing effect. And of course, some of it you can borrow overseas, but that itself is not going to solve the problem. That, your problem is going to be you have to grow.
Okay, there's another question, Murtaza. Why does Sri Lanka need a dedicated unit for analyzing general equilibrium effects of macroeconomic policies instead of relying on partial equilibrium analysis?
Yeah, so that is basically the fundamental problem. There was an economist called Walras who talked about this general equilibrium some time ago. The partial equilibrium approach is what got us into trouble. It's like the human body. It's all interconnected. You can't basically say that I will basically, have a wound. It's like gangrene. You have a wound, and then the gangrene comes and kills you unless you cut the hand off. So the fiscal policy and a lot of policy measures, they parceled out issues. I'll deal with, if the balance of payment problem, there is a car problem. I'll ban the importation of cars. I put super high taxes. But then it creates so much a distortion all over the place. This issue, you have fishing problem, right? I don't have time to go through. I had the slides. I had like 150 slides. Take the fishing problem. Take the market for protein. Now, this new exemption for milk before that, milk has VAT. Eggs have VAT. Shellfish has VAT. Chicken and beef have VAT. Fish has no VAT. Right? So now this partial problem is, okay, you solve the problem, the fisherman basically. I'm going to exclude basically VAT. Now you are favoring fishing over poultry. There are a lot of poultry farmers. Now the poultry farmers are disadvantaged. Right? What about the dairy farmers? Because you don't allow, milk had VAT on it. The problem is the fish. You should have had VAT on fish also. Then you come and say, no, I want to give concession to the fishermen, so I'm going to exempt kerosene from all taxes. Now, kerosene is more expensive at the refinery than petrol or diesel. Okay, so you don't tax kerosene. Now, the question is that you are trying to incentivize the fishermen. Other people are now using the kerosene. Even factories, as P.B. Jasundra once said, most of the kerosene is consumed in the Gampaha district because they are using it instead of, say, LPG. It's a dual-use fuel. So the kerosene is only used in the outboard motor. You can't use kerosene in the big boats, the multi-day trawlers, which have diesel engines. And the smaller boats basically are less productive than the larger boats. So, by policy, you are encouraging lower productive activity. So all of this basically, you try to take that partial equilibrium approach, it won't work because it's all interconnected. And the wrong people, somebody will game the system. You're misallocating resources. As I told, for years, we said we want to make things affordable. So for bus fares are going up, so we can't increase the price of diesel. But the buses only consume 15% of diesel, 85% of diesel are other things. So you kept the price of diesel artificially low, then you say, no, the goods prices will go up. But as I was trying to show, if you look at the expenditure consumption analysis according to deciles, the poor people are accounting, maybe the bottom 50% is only accounting for about 25% to 30% of consumption. The top 50% are the majority of consumption. So you have a targeted policy to benefit the poor people, but mistargeted subsidies are benefiting the rich people. So the way to do all of this is basically just give them the income, like the Aswasumra, and allow and make people like myself pay all the taxes because I don't need subsidies.
Correct. There's another question, Murtaza. Can you comment a bit on the BD, how BD is taxed and if there's any issues in relation to it?
BD is massively undertaxed because it's that something leaf, which is also imported from India. And it's a very cottage informal sector. So I don't remember exactly. It's a unit rate that they tax it. It's a terribly unsafe product. It's better to get, it's ideal that nobody smokes. But if they are smoking, basically, it's better that you encourage them to smoke something like Capstan than BD. So because of fiscal policy, you basically, it's easy to tax cigarettes and it's difficult to tax BD, and then therefore you encourage more BD consumption than cigarette.
Murtaza, what's your thoughts on the withholding tax, which was announced yesterday? Would that compensate for the tax losses, or whether we have to add more taxes at the latter part of the budget?
See, the biggest one withholding tax is the interest. So, how big, if you take the government's 18 trillion and say the interest is 10%, there's 1.8 trillion of interest going to somebody. Of course, most of it is going, the banks hold like 40% or something of the assets and government securities. Then the pension funds, etc. And then if you look at the bank deposits, 70% of the deposits are held by individuals. Some of it could be proprietors, right? So how many of those people are filing tax returns? So the argument is that if you take it to 10%, at least the leakage, some of it can be reduced, right? So in the case of interest, I don't think there is an excessive issue in terms of fixed deposits. Anyway, government securities, there is no withholding tax, no, because it's a more institutional market there. I don't see any negativity in that.
Sorry. Murtaza, do you have energy? Because you batted like for 2 hours and I don't want to
I only used 50% of my slides. I had another 50% of the slides. I was speaking too slowly.
Okay, there's more questions coming in. There's one, there's the notion that the public sector at a national and a provincial and even local level is overstaffed and inefficient. What the data bear this out? If so, what would you advise restructuring or efficiency improvement?
Yeah. So on that question, because I never touched on the expenditure side, can I have my slides back? Because I have some slides to show. This is an important point that they make, This is this argument. I don't have 2024 figures. We spend about ₹1 trillion on salaries and wages, right? Pensions is outside. So in the 2019 annual report under, I think, Chapter 7, they give a cadre breakdown. And this is how that time close to 1.4 million public servants. So who are these public servants? There is 240,000 teachers. We have a ratio of 18 children to 1 teacher, about 4.2 million or 4.3 million school children at that time. 150,000 healthcare workers. Triforces, 250,000. About 180,000 at that time in the Army, 50,000 in the Navy, and about 20,000 in the Air Force. I don't know what the figures are now. In the SOEs, there are about 251,000, and provincial councils about 450,000. Now, the police, which is not represented here, is, I think, in that provincial council figure. Now, one police person came to meet me once, and I asked, that person was in administration. There is supposed to be about 90,000 police people in Sri Lanka. And I think that former minister Sarath also was saying, about 30,000 people are guarding all these, so many people, presidents, ministers, all that may have changed. There's a huge ministerial security division, and about 30,000 in the STF. The balance is only in the beat police. So I don't have exact data of where the people are, the cadre is there. There is, now for example, you can't get rid of the teachers. I mean, you need them in the schools. You cannot get rid of the healthcare workers. You need them in the hospitals, etc. And they are also hugely underfunded. Maybe there is some room to demobilize the military, but it will take time. Now, if you have 90,000 police and 30,000 are guarding all these different people, maybe there is room to reduce on that, or maybe put them on the beat, to protect the people, not few people. So there is basically room to downsize the government, but I would think that the better solution is they are 15% of the labor force. What we have to do is to reduce the proportion of the labor force. The labor force is 8.4 million people. We need to create 1 million more jobs because the labor participation rate is only 50%. And I don't know whether our people are aware that Advocata is going to have a major conference on the 22nd and 23rd. 22nd is understanding the constraints, where the issues with the labor force, the female labor participation, demographics, all will be discussed in depth. So we have to create 1 million more jobs to increase the size of our labor force and thereby reduce the proportion of the state in the labor force. Absolute reduction in the number of people will take a long time. And in terms of expenditure management, it's all very sticky. There isn't much room to reduce public expenditure. Most of the consolidation, fiscal consolidation, will have to come on the back of revenue-based fiscal consolidation. As the IMF said, Sri Lanka doesn't have an excessive spending problem. It has a revenue problem.
Murtaza, also there's a question on vehicle taxation. On vehicle taxation, wouldn't it make more sense to garner a large share of the taxation on the ongoing basis from the revenue licenses and the implementation of a congestion charge?
Yeah. So if you can do it, good. So because it is technologically very difficult to do, so now government's revenue problem cannot be met through corrective taxes. So congestion, the problem of congestion is imposing corrective taxes to impact behavior, right? So, like these taxi hailing apps like Uber and PickMe, when it rains, there is a surcharge, surge pricing. So you are basically, that's what you are trying to do. Demand and supply is determined at the margin, the incremental buyer and incremental seller. When it rains, there are more people who want to get on the road, right? So you want the supply response to come, because not everybody basically in taxi hailing is driving on the road. And some of those people, when they see the surge pricing coming on, they come on the road, right? So you're incentivizing supply to come, but you are also sending a price signal to demand basically to dissuade. So, you wait half an hour. You don't need to, unless it's urgent. If you can't afford it, I mean, you want to save money, you basically postpone your trip by 15 minutes or 30 minutes till the rain ceases. So in the case of congestion, now there is a supply side solution will take time basically. It's a pity MCC would have addressed some of it, but public transport, it'll take time. So we have to have demand side solutions. Now, demand side solutions basically will need some technological thing to dissuade people all jumping on the road at 5 o'clock. So you'll have to bring some technology and GPS, etc. But the point I'm trying to make is corrective taxes cannot be a mechanism to bridge a budget deficit. Corrective taxes are imposed to address market failures, right? So if you have a problem of revenue, then you have to basically get the revenue of the people who have the income. And as I said, that tax policy is the first place that I would attack, because there are still so many people who are legally exempted. This is going to very rich families. If you look at these projects, who owns them? Finally, the benefit are going to this top 100 or 200 families in Sri Lanka. So unless they have the ability to lobby or policy capture, I don't know why we are continuing with these tax exemptions and tax holidays. There are certain tax concessions, they will enjoy a tax concession forever because there is no sunset clauses. I mean, these things are not tenable. They have to be stopped. So we have to first go and get the taxes from the people who should be paying, who are legally exempt through policy. The circumstances have changed. The second thing is basically, obviously, there is a large number of people who are self-employed, who are earning large amount of money, who are not paying their fair share of taxes. So you have to have an enhanced tax effort, fiscal effort to get it from those people. But in terms of vehicles, as I said, that I think it is ridiculous to tax vehicles more than 50% of its retail price, right? Which means that you will be taxing on the CIF price at about 120, 130, 140. As you know, Dhananath, when I interviewed the architect of the reform in New Zealand after their financial crisis in 1980s, Roger Douglas, he said, look, I put GST on everything. I didn't exempt anything, right? Because, then I'm not impacting relative prices. Say you want to buy a Ferrari in New Zealand, you pay your 15% GST or whatever it is, that's the end. Because anyway, the Ferrari is going to cost much more. No? So if I'm basically paying 15% on a car that is maybe 5 times more expensive than a normal car, then I'm collecting 5 times more taxes on the car itself. You don't have to put like super high tax on a very expensive car again, basically. It just doesn't make sense. Because if you are a successful person and you have paid your 36% tax, why you have to pay again? And here, according to our law, basically, you are paying 30% on your underlying profits if you're a businessman. On the dividend that you're receiving, you're paying another 15%. Your tax burden is 40%. You're left with 60% of your dividend, basically, of the earnings from the firm. And now you want to go and buy something for whatever reason you want to, you are paying like 200% on the value of the vehicle.
Got it. There's another question, Murtaza. Do you think Sri Lanka is still vulnerable to the kinds of import scams, in brackets plunder? We have seen in sugar and garlic in the past where an importer was able to gain a temporary relief of import tax to make supernormal profits. What sort of governance can prevent these?
Yeah, the Sini Hora, no? The Sini Hora, yeah. They are also from one of the same schools that I went to. So one of the things is that that is coming from this commodity levy. And in the IMF governance diagnostic report, they have said very clearly to do away with the special commodity levy. So there is, because the thing with the special commodity levy is it doesn't have to go to parliament to put it on and put it off. It can be done by an overnight midnight gazette. So you are giving massive discretion to the Ministry of Finance to do this and the minister, right? Normally, if you want to impose taxes, etc., you have to go to parliament, right? So then there's more checks and balances, you have legislators. It's not so easy to do it. So the problem here is a special commodity levy. And the basic solution is to just take it out. And there is already a plan. Under RW's government, I was once called to a committee where they are going to phase all these things out. It's all about trade reform because they try to protect the farmers, etc. We had to do another presentation of how fiscal intervention in agricultural markets, inputs and outputs, is significantly making farmers poorer. Because when you start intervening in the markets, basically, you don't, some people are winners, some people are losers, and the wrong people are the winners.
Okay, I think you have batted for about 2.5 hours. I think when we first initially sent the calendar invite, it was for accidentally by mistake, it was 5 hours. But I think even it was for the right reasons. But I'll take a few more questions very quickly. If you want to wrap up, Murtaza, we have about.
No, I can.
You can, okay. There's another question on what are your views about the property taxes? I have 120 million apartment in Colombo. I pay less than 40,000 tax per year as tax.
Yeah. So I had a whole bunch of slides on this, but it will take too long to explain it. Now, you must understand that land is a devolved subject under the 13th Amendment, right? It's under the purview of the Provincial Council. There are two main sources of tax. For the Provincial Council, main source of tax is stamp duty. Now, stamp duty comes when you have property transfers. So, Western Province, because the values of the taxes are high, they get a fairly significant share, but not enough to pay all their expenses. Right? So, the municipality, so they collect some of the taxes and give it to the different municipalities. And the municipalities, basically, Colombo municipality, if you look at the assessments, rates and taxes, they have been there for over 100 years. So, in one of my research for a tax oration that I gave 2 years, I went to the municipality to try to understand with one of my analysts, Dinesh. I went there to figure out like how this thing is working, and some of the slides are there. So they have based on square foot area and residential, and they say grade A, grade B. So there is an assessment basis. First of all, their assessment basis is very low. Second thing is the assessor who comes to assess the property is corrupt. So basically, he can ask for inducement to reduce the assessment value of the property. Now, I told you one of the great tragedies was saying no to the MCC, 480 million. 365 million of that 480 was all to do with the land improvements. BIM Savia, accelerating the speed of BIM Savia, which would be a title system instead of this deed system, because only 15 or 16% of the properties are under BIM Savia. You don't have all this deed business. You'll have a cadastral system where the digital map, you will know who owns what. Then when land transactions happen, you can tag all of that. And now it's all in a manual system. They would have some $15 million or something was to improve the quality of the land valuation department. So in answer to that question, I fully agree. In the United States, about your property taxes on a house is about 0.75. On commercial property, it's about 1.25, 1.5. And of course, in the US, your property taxes in your city pays for the schools. So that is why your ability to go to a school is highly dependent on your locality, because that's how they fund it. But as this person says, he's 120 million and 40,000. What about in Colombo 7? You will have houses that are 500 million rupees, 600 million rupees. What are they paying? Nothing. So 100% fully agree that the problem they try to do this imputed rental tax is because that money would have gone to the central government. If they improve the property tax, that will go to the provincial council. That won't come to the budget of the central government. But my argument is that, okay, your revenue won't go up with the central government, but you are also transferring money to local government. You can reduce the amount of transfers.
Right. There's another question. Do you agree with the government's statement that inflation will decrease in the coming months, but that prices of essential goods remain significantly higher compared to the neighboring countries?
Yes, so I can't disagree more. The inflation will remain because of the base effect. We were very lucky with the weather. Now again, last year we were going to have a drought because of El Nino, because of Indian Ocean dipole. We had rain, 3 months of rain. We had a very good maha crop, and we had hydro generation. This year also has been a very wet year, and in December also it's raining basically. So we are going to start January where irrigation tanks are high, our reservoirs are high. Although there was a big damage to the rice crop, Ampara, which is 20% of rice production, there was a big loss. They were trying to regrow again. I don't know the exact statistics. That is, so you will have problems with rice, etc., and some of the vegetables. Those are volatile issues. But because demand, aggregate demand is way below. That is why the economy is still operating way below 2018 capacity. You don't have the problem of too much demand pushing up prices. So the base effects that we enjoyed in 2014 will not be there in 2015. So inflation will not be negative. The central bank projections are for it to go back to about 5%. But essential goods are much more expensive here than in other countries because of the policies that we follow. Because if we have competitive markets, we allow freer imports, etc., prices will come down. So the way to address the issue of essential goods being expensive is not through price controls, not start accusing people of being mafias and monopolies. It's just competition. Allow more supply to come in, more commercial farming. Farming is all based on very small land plots, etc. Allow. So, for example, now the president basically announced he is going to take the VAT out of milk, okay, to make it affordable. But who is consuming the milk? I mean, that 1 liter Ambawala milk packet is, I think, like 550 rupees. Basically. Naranath, I'm asking you, you recently had a baby, basically. Maybe you give the baby maybe it's too small.
It's too small.
Do you drink liquid milk at home?
No.
Right? But I do. Because I can afford it. So he gave me a bonus, no? So it doesn't make sense. And the problem of the domestic farmer is anyway, we have some of the highest milk prices in the world. There's a guy called Jacques who runs basically Ababella, he's a South African guy, the farm there. He told me you have the second most expensive milk in the world. So basically, if you go and look at who consumes liquid milk, because it's so much more expensive than milk powder, the benefit, the problem with milk basically is a problem of feed. The feed is too expensive. It's 70% of the cost of production because they don't allow you to import feed, telling that you have to protect the maize farmers in Sri Lanka. So you have to make up your mind, do you want to produce more milk or do you want to produce more maize? You can't do both together, or you have to have different tactics. If you want to produce cheaper maize, you have to allow industrial scale farming. You have to give people 500 to 1,000 acres. You have to give the water from the Mahavalley to those because we don't prioritize fodder crops. We didn't previously. So again, these things don't make sense basically. So if you want to reduce the price of essential goods, you have to make competitive markets work. You have to allow large scale farming. You have to allow modern retailing to take out all the inefficiency. That way you will reduce the price of goods.
Got it. There's another question connected to agriculture. How do you see agriculture modernization, which had happened past 20 years, funded by World Bank and donor agencies? Same will continue in similar phase, ? Or what changes do you propose?
So what the World Bank has done in agricultural modernization, I'm not an expert on that, but I only have a superficial understanding. And the anecdotal stories that I hear is very good. Because I have an interest in this, and in our Advocata conference on day 2, we are having a session on precision agriculture. So I've been talking to a lot of people, etc. Agriculture is a scientific pursuit. It has been done like a cottage industry in Sri Lanka. So a lot of the interventions, there's a lot of demonstration projects that they have been doing. those things can make huge difference, because it's a scientific pursuit, right? So I think the issue with a lot of their work is the dissemination has to be increased. And there are so many, for another meeting just before this, Dhananath, I was speaking to Mr. BRL Fernando. He was formerly who ran CIC, and he was giving me statistics about rice cultivation, something they had done on certain farms. He said they got 400% more yield than the national average for rice. Now you need to bring somebody like that on this chair and ask him what else they can do. They have much more expertise, but from what I have seen and what I have heard, that agricultural modernization project has a lot of learnings. The challenge is to disseminate for more and more people to use what has already been learned and the knowledge that is already there in the country.
Got it. There's another question on non-banking financial institutes. What is your view on the leasing stamp duty increasing to 2%? The NBFIs cater to the non-banking segment, and given the above, would it be detrimental for the non-bankable segment catered by the NBFIs, as banks will not have much of impact as they provide loans mainly compared to leasing provided by the NBFIs?
So again, when I first saw that, Dhananath, I thought that was to do with property transactions. But I don't know, that is a lazy form of taxation. They have gone after an area that you can. And the distributional impact, one of the things in the governance diagnostic report is they said that, the Director General of Fiscal Policy, before they give any incentives, etc., they should get him to sign off. Now, in the case of this stamp duty, etc., I like to see the policy paper. Who did the impact assessment? Distributional impact. Now, if we put this tax, who will get impacted? Now, if they impose a tax like this and they say that it's going to impact people like me, it's okay. But as that question is being asked, whether it is going to, finally be borne by people like, for example, I don't lease my vehicle. But if this is going to be borne by people who are tradesmen, people who are buying motorcycles, buying three-wheelers, then it doesn't seem to be very equitable.
Okay. There's another question. How can we get the tax income from the gig economy?
So that has been addressed, I think. The VAT, they're going to impose depending on location. So there was an arbitrage that especially PICME was complaining that, their service, they have to pay VAT, while Uber, because it is based outside Sri Lanka, Uber doesn't have a permanent presence. There is something called the permanent establishment principle. They only have a marketing office here. So because it is provided from outside Sri Lanka, our law excludes them. That they're going to address. So that okay. Tax neutrality is going to get addressed, and high time it was done.
Isn't indirect taxes more equitable than direct taxes, which can be evaded and avoided?
No, on the PO thing, I mean, it's not equitable, because basically the rich people consume much less of their income than the poor people. I mean, if you put indirect taxes, basically, I am advocating that we have VAT on everything. You don't exempt anything. And you start taking out all this Cess and PAL and SSL. You just have a VAT on everything. It's a far less distortionary tax because you get input credit. Now, evasion basically is a tax administration problem, and it's a fundamental, what type of societal problem. So you can't say that because you are unwilling to enforce, let's just go and put an indirect tax. That, to me, that is not tenable. It's like saying that, if you can't stop crime, no point having a police force.
Okay. There's another question on investments. Should Sri Lanka prioritize tax exemptions or direct subsidies to attract investments?
So I had a whole section on tax incentives. I'm going to spend a few minutes explaining this. You only pay taxes when you make profit. For most businessmen, 90% of the effort is about making profit. You only worry about taxes after you make profit. It is a completely misguided, misunderstood concept that in order to attract investment, you need to provide tax incentives. We have gone and ruined our tax base. Now, if somebody is going to bring you an investment that is going to have a very large spillover effect, right? There is a huge knowledge overflow. You are going to bring a company or industry where Sri Lankans are going to get tacit knowledge we don't have in this country, and you will have to give that tax incentive to get them to this country. Then somebody has to write a policy paper, analyze it, and argue the real case for it. Then you give. In most other cases, basically, it is not warranted because the most important thing is basically to make profit. Now, where we have gone and given tax incentives for real estate development, etc., they are coming and doing real estate development, developing luxury products to sell to rich people, what I call the 1,000 families. There is no tax incentives necessary for any of those things. But what you can do is you can make sure that people make profits. And to do that, you can try to see how to reduce their cost, how to increase the predictability of their cash inflows and cash outflows. If you take the NPV methodology, you want a positive NPV project Dhananath, the magnitude of cash outflows, the magnitude of cash inflows, the timing of those cash flows, and the uncertainty attached to those cash flows are the key drivers of NPV. So if you use the NPV framework to think about how to improve the returns for investors, there are lots of things that you can do outside taxation. Now, if you are a renewable energy developer like me, there are 15 or 16 permits that you need to go. It's a nightmare. It's a nightmare, from coconuts to archaeology to wildlife to forestry to some fellow in the local town. So many people can block you, right? So the uncertainty attached to it is far from the permitting, which is under the control of government, and nobody is bothered basically to solve your problems. You are on your own. Now, what the risk that you run from investments, from exchange rate, from interest rates, from technology risk are far smaller than all these regulatory uncertainties. So, if there is a mechanism to make sure that, you have a single window or somewhere basically where all these people in government are brought around one table and, you get the approvals as fast as possible and they don't have corruption vulnerabilities, because sometimes they just keep quiet, wanting you to come and induce them. And now you have an anti-corruption law, etc. So if you solve those problems, which is not actually going to cost the government a lot, of course, the people who want to make money of that, they may be impacted. You don't need any of these tax holidays. In fact, the prices can all come down because you are not factoring in the uncertainties.
Got it. Murtaza, if you think that presenting your investment slide is important and the tax holidays, because we still have about 60 people on our social media and on the Zoom call, and I can see some journalists are also there. If you think it's valuable, I can do the
what
promotion.
I will do is you can attach it to this thing because it's quite long. I mean,
it's quite
I
long.
had things on the port city. Basically, what I'm saying is a real estate development, right? It's nothing more than that. It's a real estate development. It has huge advantages going for it. First of all, due to the location. You are next to Colombo 1, right? You are a privileged location. Some people like to stay near the sea. Some people don't like it because it will corrode the hell out of everything that you have. But you have advantaged location. You have superior infrastructure. You have access to a better supply of electricity. You have better roads. You have that port access road, which is, I've been waiting for it to be open. Maybe in the first quarter of next year, it will be open. That will link up to all a highway system. So you will have faster transit access. So the location, the positioning, the infrastructure, all of that has lot going for that. we can't be giving tax like for $10,000 and $100,000, 20-year tax exemptions. I mean, as I said, you are creating huge arbitrage. So this is not tenable. Then in the case of other tax incentives that we have given, as I said, the way to give tax incentives is sometimes you have to give what are called tax credits. So Dhananath, let's take the example of training. We know that our universities can't produce enough graduates for certain of these knowledge intensive things. Now say you have a need for, say, computer programs, right? So maybe they are too poor to pay for it themselves. And the government says that for every one person that you train, I will allow you to deduct part of that training cost from your taxes. So you give a tax credit of say 100,000 per person who is trained, but it has to be an accredited center. You can't train from anything. You can't just say that you trained the person. Then for that person, you can deduct it from your tax expenses, because the thinking is that even if that person leaves the organization, that person, as long as he's in Sri Lanka, you can tax him. And by training, he's going to earn much higher income. So we must move away from tax holidays and use tax credits, because tax credits are also visible. You know what it costs. Now, this so-called tax expense, the cost of tax exemptions, are people not capable of calculating it, because you have to, if you're tax exempt, you are not going to file your taxable profits. I think the RAMI system, you have to file, but I have been asking, you calculate each of these tax concessions on an individual level and tell how much it costs, because a tax expense is like they paid you the tax and you gave it back to them. A tax credit is more visible and more targeted, and it's not time dependent. You say, okay, this year I will give you this, right? That is the way, and that there is a strong argument. Now, if you look at in the US, etc., how they basically gave the tax credit is they said that for electric cars, they gave you $7,500 at a certain level of income for certain type of cars. You can only claim that tax credit if you basically pay taxes. So what we should have done, even with these electric cars, is they say, okay, if you buy a new electric car, I'll give you a tax credit. We are going to tax all cars equally on some percentage. But if we want to encourage electric cars, if you are paying taxes, I will allow you to deduct X amount from your taxes, right? Then you don't distort this relative pricing. Distortion is not there. That is a much better policy instrument to use. We are using the wrong kind of thing. So everybody is gaming about the size of the motor and, under declaring there's some maximum power and rated power and, all this. You don't have to get caught. Of course, you have to just use value. People are undervaluing the imports, but that there are ways to so many countries do it. You can use the agent's value, and there are mechanisms. It may be not 100%, but it's better than this method we have used.
Got it. So I'm wrapping up for the last two questions, but before that, those who are still joining with us, I think we have about 60 people. Please go and subscribe Advocata, and there's a conference coming in 21st and 22nd of January next year about productivity and how Sri Lanka can grow out from the crisis. And we are going to capture multiple sectors of the economy. So please buy tickets, and that will be available soon on Advocata website. So please stay tuned. And at the same time, please subscribe us and follow us on all social media platforms. We are available everywhere, pretty much on TikTok, on Instagram, on LinkedIn, pretty much all over social media platforms we are available, and also available in all three languages. Advocata Institute is our English page, and Advocata Plus is our Sinhala page, and the Sinhala channel, and Advocata Kural is our Tamil channel. And we are not just doing the translation stuff. We have different sets of content for each platform. So it's quite tailored based on the audience and the caliber of the audience. So please make sure that you follow and share on each platform and content. And please subscribe us and support us. That's the most important thing, because to provide independent analysis on these public policy issues, of course, it costs money, and we need your support for us to continue the good work that we do. And that's the only way that we could sustain. With that, Murtaza, there are two questions. One is on the northern part. Sri Lanka, especially in the northern part of the country, has abundant marine resources, yet we still import fish products such as dried fish. Given that fish is a rich source of protein and relatively inexpensive, what is the case?
Yeah, this even this tin fish basically is imported from South America, from Chile, from the southern Pacific. Well, the salmon, you can't grow salmon in warm waters. It belongs to a different water. But this question about fishing that has troubled many governments. Of course, we catch a lot of fish in Sri Lanka. The fishing is about 1 to 1.5% of GDP. It has a big contribution, right? The question is, can you catch more? Can you become self-sufficient? So one is that not all fish species grow in Sri Lanka. So some of it, there is a seasonal variation. In fact, there was an entrepreneur who was importing fish who came to meet me about 2 weeks ago. And he was from Negombo. So I was quizzing him about this. One of the things he said is fish also, like agriculture, is seasonal. You don't get it all around the year. And the weather also changes, right? So maybe sometimes you have it the East Coast, West Coast. Sometimes you have to import. So you can't become totally self-sufficient. Second is that certain species of fish, like dried fish, we think dried fish comes from Maldives. But most of the dried fish comes from Iran. I didn't even know this. That in their waters, basically, they have a very organized dry fish processing industry. So there is not only fishing, but processing also that matters. So there are critical parts of the infrastructure that is lacking. And in fish processing, Dhananath, there's a lot less, like coconuts. We always say that, we should be processing the coconut because a lot of the coconut in the home gardens get wasted. Because there are so many components of the coconut that can be used for different industries, DC, activated carbon, coir, etc. I used to be in one of those industries some time ago, so I understand. In the case of fish, there's a lot of parts of the fish that if you process at home, you throw it away. If you buy a whole fish and you cut a lot of it you'll throw away. But if you fish process, very little of it gets wasted because there are alternate uses. So with regard to the problem of fish, basically, and what happens is if you start processing the fish, because there's more value coming, the fish price will also go up. So there is higher incentive to pay the fisherman. But the fish meat that you eat does not necessarily have to go up because a lot of the value increase will go from those parts that you're throwing away. So, as I said, that even in our fishing, because of the policy of kerosene and incentivizing the small fishermen, the higher productivity production units are not encouraged or you're discouraging the more productive units, right? Like in the case of diesel, they have to pay the tax, the smaller guy does not pay on kerosene. So it's a combination of many things. I'm not an expert on that, but yes, there is a case to increase it. Having said that, from all the animal proteins, fish is, I think, 2 times bigger than poultry.
Got it. The last question, Murtaza, is what would be your advice to the government and the Ministry of Finance? With that, we will be wrapping up. A lot of people have asked, like, where can they find this presentation? We will attach it. If you go to Advocata website, we will upload the video link and a link to download the presentation on the PDF format. And you will also see a lot of content coming out on our TikTok and also short videos of each section that Murtaza spoke about with slide inserted. Give us a few days to insert, but some of the clips will come out sooner, so then you can refer. And this is almost 3 hours now, so you can watch part by part over the coming holiday time as well. and hope this will provide and feed into our policy making system. And also we are planning to do a lot of review videos in Sinhala and Tamil on the content we created today. Murtaza, what would be your final advice to the
Two
government?
things. I already covered it. Appoint a full-time finance minister, because it's a full-time job, basically. I mean, just as much as there's a lot of expectation from the president, he can't do two things. All the previous presidents have been keeping the power, and that encouraged super secretaries who messed everything up. My sense is we need a full-time finance minister. Somebody has to be appointed. Second thing is, like Arturo Guterres talked about Mexico, set up the institutional setup in the Ministry of Finance. He called it the cast of actors that you need, and his presentation was called Institutions Matter. Whoever asked this question, you can go and look at a YouTube channel where we had a whole session with him at the BMICH in the evening. He explains. So we need a better institutional setup in the Ministry of Finance, especially in the budgeting process.
Thank you very much, Murtaza. The problem with Murtaza's conversations are you don't want to stop it, because every time you ask a question, he will answer and he will go on, and there'll be more. Your brain is getting stimulated to ask more and more questions. Murtaza, thank you very much for spending 3 hours of your time and with all detailed presentations. And thank you very much for everyone who joined watching our YouTube and also on Zoom call. We had about 60 participants till the end from the beginning. I think at the peak, we had close to about 100. So thank you very much, and you will get another email with all links. With that, we are going to wrap up this conversation. Thank you very much, Murtaza, and thank you very much, everyone who joined with Musings on the budget conversation. Thank you and good night.